Good evening. It's John Stark, Centaurus Financial. It is Tuesday, November 24th, and today was a record-setting day for the Dow Jones Industrial Average and the New York Stock Exchange. Today, again, was a record that all time that many people thought would never see happen. The Dow Jones Industrial Average closed over 30,000 today. Amazingly, it actually was up almost 445 points. It was a broad market rally. Many stocks participated, including some stocks that hadn't been active until recently that did very well today. We even had the crude stocks move. We had the automobile stocks move. We saw some of the utility stocks move, and of course, we saw the usual energy and some other companies that have been less active recently. But so we had a broad market rally across the board. And again, we're over 30,000 now for the Dow Jones Industrial Average, and this is an all-time high. And to give you some perspective, when I first started investing back in the late 1970s, and this was about 1979, the Dow was right around 790. And I remember doing my first investments, which was about 1978, 1979 era, and the Dow was hovering between 700 to 800 all the time. And so we've gone up 30 to 30,000. That's almost amazing to see imagine the growth we've had since the 1980. So anyway, going forth, we look forward to the market the rest of the week, and because as you know, this is the end of the month coming up. We have a short session. We have no session on Thursday for Thanksgiving, but we have a trading day for tomorrow and Friday and then Monday. And if the market can hold its own, it'll be the best market, best stock market results for 1 month since January of 1987. So we're going back to 1987 when Ronald Reagan was president, and so that was 33 years ago. So we're actually to pace that. And we remember 1987 was a great year, but also 1987 was the famous crash of October 19th. 1987 when the market dropped 20% one day. So we'll hope we keep our fingers crossed and we won't have any duplication of 1987, at least the latter part of 1987. I want to thank everybody who's been watching our show lately. A little update on the market. We try to give you some points that you want to understand about. We'd like to discuss. A lot of people have been writing in different topics, and we'll cover coming up soon. When people ask about alternatives to stocks to give a decent yield, and many people said, "Where can I get a decent yield? Because I'm not getting it from my CD at the bank anymore." So we'll discuss credit funds in more detail coming up, because credit funds do provide a decent yield, basically for people or investors that basically the credit fund serves the job of what the banks used to do before Dodd-Frank, is they loan money to corporations for their expansion and business development. And usually what we call short-term loans, anywhere 3 to 5 to 7 years, and many terms as little as $25 million on up to $150 million, which is a sweet spot that the banks no longer go after, but the credit funds have pursued it ever since Dodd-Frank. So that's a very good area for people to invest in. Basically, the only asset for these companies are the interest on the loans. As you know, when interest rates fell this year due to COVID-19 in the spring, many of these loans came off the books because corporations refinanced them to get lower rates or pay the loans up in full. So that is something to consider. The net asset value does fluctuate with the amount of interest that's due of income and loans. So that's something to consider. But bottom line is these credit funds provide a very competitive yield. Many of them pay anywhere from 4 to 5 to 7 to some even as high as 8%. And they can pay on a regular basis, and so it's an investment that many people consider to diversify their portfolio and provide some yield that's above the inflation rate. So credit funds, some will go into more detail in the future and explain how they select the bonds, or rather select the loans that they use in their portfolio, and how some companies cherry pick the loans on the market, and some financial institutions originate their own loans. And so we'll discuss them more importantly in the future and explain how different credit funds work. I want to give a shout out to everybody who's been sending me emails saying they watch these little updates on the market. I want to have a shout out to Nick Rutledge in Chattanooga, Tennessee, and we really appreciate that. We got to also do a shout out to Aaron Smith. Aaron's my buddy at Centaurus Financial also here in Richmond. And I'll shout out to Jenny Bannister, who I went to high school with. And so I want to say shout out to everybody. please let me know if there's any topics you want us to discuss on these shows, and we'd be happy to bring them up and discuss them in detail. Anything that pertains to your investments or retirement planning or anything of the like. So we'll be happy to discuss that in the future. In the meantime, contact me direct at jstarke at cfiemail.com, or you can contact myself direct at 804-306-5620, or you can contact my administrative assistant and my office manager, Andrea Golder, at agolder at cfiemail.com. Look forward to seeing everybody tomorrow. In the meantime, wish everybody a happy Thanksgiving.